Hey, everybody. Welcome to week 127. Not that we're counting, but we are. I mean, even we are starting to go, really? So anyway, hopefully you guys are doing a great job today with your businesses in spite of the crazy stuff going on out there. We do want to hear from you on what's going on in your world. We're going to talk about some of the things that we covered last week. I think it's still worth going back through the 8 ways to beat stagflation in business in case we're dealing with it. I know that we're awaiting the Fed. We know that they're going to raise interest rates. We just don't know how much. And I think that comes out, what is the 21st? Is that right? Something like that. But there's lots of speculation, which is, always adding to the drama. You guys know the drill. And before Papa Joe hits us up on the chat, I better go and make sure that chat feature is enabled. I just don't like it if he starts busting our chops because, oh yeah, everyone. All right. We've preempted Papa Joe. So anyway, Jack, you didn't have any rants since you're coming at us from your home office today?
I don't have any rants. It's nice and peaceful here. No dogs are snoring yet, but I imagine that will happen shortly. Weather's nice outside, so but I do have to go into the office uptown, so at least it's not during rush hour.
Yeah,
I guess if we're going to start on the whole issue of stagflation, maybe I should go over kind of what that what the definition is essentially. And I actually pulled up that chart that I can share as well that shows the difference between stagflation and inflation. So remember that stagflation is an economic period of high inflation, slow economic growth, and relatively high unemployment. So in some people's minds, we talked about this last week about unemployment rates and where they're at and where they have been in relation to, and the conversation kind of went off and maybe my fault on a tangent of the people who are at the corners of I-485 and Providence Road and other areas that, okay, can they really, when people say get a job, is it really possible for them to get a job? So let me share this screen here for a moment.
there you go. It's
okay.
working. All right, good. Like it.
So it's this chart. So again, as it says, stagflation, prices up, spending down, economic growth down, unemployment up. And you see the differential is in spending. Well, prices go up in both cases, but the differentials are in the other factors. And as I said, unemployment going up or going down maybe a deciding factor whether we're into stagflation or inflation. So just wanted to share that again with you guys. So
yeah, it's interesting. I was listening to a business news channel this morning, and they were talking about housing starts really slowing, even in Florida, where Florida is seeing a huge influx, especially from New York and other places. For a number of reasons, but housing starts are slowing. We're seeing that with some of our clients that are working with the tract home builders and custom home builders too, but especially with tract home builders, you start seeing it more. You see it faster. So whether that, and a lot of it is like, you think about it, 30-year mortgages are double what they were not that long ago. Now it's still low compared to 1982 and 83 when I got married. I think mortgages at that time were 14 or 15%. So hey, it's a bargain now compared to that, but compared to 2.6 that I got locked in 2 years ago, it's not good. So anyway, you guys know the drill. Hit us up with Q&A. Hit us on the chat if you want to harass us. Papa Joe hasn't piped in yet, even sing any of our praises for acknowledging that we needed to get the chat enabled for him. So Adam, I know you have to have some thoughts. You have anything you want to rant on?
I wish. No, the only thing that's come up in this last week is that, I keep on asking because we're in the middle of doing our quarterly planning appointments right now. And then we'll kind of roll into year-end planning coming up here pretty soon. So I keep on asking everybody the same question around, what they're seeing in terms of inflation and any sort of slowdown or pressure. And, so far the answer's been, I don't know. I think I should, but I don't currently see anything and I'm not hearing anything. Well, I finally had my first, we've definitely seen a real slowdown, which, I think is understandable given the nature of this business. As I said, so far out of, I've probably had 100 of these meetings so far. I've only had 2 people that have expressed any kind of slowdown so far. The first one was a company that does really high-end executive recruiting, and they just said, people aren't, filling those positions, or they're being slower to place, $400,000, CEOs with 10% stock option, whatever. It's like, okay, that's kind of understandable. But then the last one that just happened actually happened this week, and it's a company that does wholesale distribution for athletic apparel to big stores like Foot Locker, Nordstrom's, companies like that. And the way those companies work is in retail, there's typically 2 or 3 different buying seasons that occur. So Nordstrom's will place a really big order and say, hey, we're committing X volume to you, and then they'll just start drawing down on that volume. That usually in any given year represents about 70-80% of what their total sales volume is going to be for the year. And then the other 20 to 30% is, okay, in the middle of the season, hey, we kind of screwed up that order, we need some more stuff, or you run a special to get to your 100% sales. Well, so obviously pre-orders are going to be the biggest part of your business. This year, their pre-orders were down by about 50%, placing orders for 2023, which is occurring right now. So that kind of makes sense in terms of just what you've heard about, large retailers starting to be concerned about, inventory levels and, what's future consumer demand going to hold, since again, the whole point of the interest rate increases is to reduce consumer spending so we can, let supply chains kind of get caught up. So there's not scarcity of goods. I mean, that's all the theory anyway, but this is the first person that I've talked to that had a real, okay, that seems like it's a super direct, other than the staffing company. Hey, that seems like that's a super direct correlation. So that's what I've seen so far. All that said, when it comes to tax planning, what I would, and then I'll have one more tirade after this, but when it comes to tax planning, we always get asked the question around, how do I pay a lower bill? How do I mitigate, part of what I'm going to have to pay? And one of the moves that we always have is, we call it kicking the can, which is basically the wonky version of that is by using some legal but creative accounting, shifting income from one year into a subsequent tax year. So you delay having to pay, you're going to pay the taxes ultimately, but you're delaying paying the taxes. Well, when tax rates are going down, that's always a great idea because you're, pushing income into a lower tax rate environment. When tax rates are neutral, it's still a good idea because, time value money, you can earn money on the money. When tax rates are forecast to increase, it's a bad idea because you're kicking income into a higher tax rate environment. So, we're in the middle of planning. People are still asking these questions. And, my same advice is still held, which is if you need the money because you're going to make a really good investment that's going to outpace the rate of a future tax rate increase, which will probably happen in 2026. given that those tax rates are set to expire in 2026 that we currently have now, if not sooner, if Congress does nothing. Kick the can, but only if you've got a good reason to do it, meaning I'm going to invest in something that's going to make a lot more money than that tax rate increase is. If it's just going under your mattress, you're a bozo for doing that, because it's just going backwards, especially with inflation. But if you're thinking that you had a banner year and next year is going to suck, then it might be a good, cash preservation, income smoothing idea, to exploit. So just food for thought, for anybody that's really thinking now next year's actually going to be down based on everything I'm seeing now. Maybe you do get a little aggressive on kick the can moves to preserve your taxes. I think to preserve the cash flow and pay the taxes in April 2024 instead of April 2023. All that said, the last thing I had a tirade on, and then I'll shut up, Gary, is the employer retention tax credit. Just a reminder to everybody, everybody and their brother set up tent poles and said, oh my God, free government money. How can we make a buck off free government money? So everybody started getting, if you're a business owner, you have been solicited on at least 4, 5, 6 separate occasions, probably weekly, by different companies telling you that you qualify for the employer retention tax credit and you're missing out on free money. I have received calls. I'm a freaking CPA firm.
We don't
It
qualify.
always had the capability to be virtual. No government order shut me down. Granted, I was considered essential, but no government order shut me down. I didn't experience any revenue reduction, thankfully, associated with the pandemic. I do not qualify, yet I'm still getting calls telling me that I qualify, and I'm an idiot for not claiming my $26,000 per employee that I should be claiming. I'm trying to be a better person this year, Gary, so I've not called back any of these companies say, I do? Please tell me more. As much as I've really been tempted to. So at the same time, I fielded a lot of stuff from clients like it's like, I know you told me I didn't qualify, but really, my buddy's grinding me and doing whatever. It's like, if you have those kind of things, please, if you really still have some of those doubts, please forward them on. I mean, I really have a lot of confidence in the company that we partnered with on the employer retention tax credit, because they take kind of the same somewhat conservative, don't want to go to jail for this mentality that we do with respect to the rules before you go do something. But I mean, they're getting, some of these companies are getting crazy. I mean, I've seen some that actually look like IRS notices. Like that's the mock-up of what it looks like, is an IRS notice saying you computed your 2020 and 2021 credit incorrectly. You should be due to receive blah, blah, blah. Call this number. And it looks like an IRS notice. I mean, it doesn't say IRS at the top. It says like Department of Recovery Rebate, or something like that. So it's just, it's just a continued, I want everybody to get every dollar that they're due. But just be careful. That's it.
If it's too good to be true, it probably is.
Right.
So, yeah.
All right. So quick little rabbit trail. I appreciate you, showing restraint and not calling these people and punking them. But, when we used to have phones that were actually attached to the wall, and if you had something, you were really fancy if you got to push the buttons instead of rotary. But we had push buttons as our house here in Charlotte in the 90s. And somebody calls during dinner hour. And we were always just getting phone calls. Do you remember that? Yeah, like always. So finally, I pick it up and it's carpet cleaning. And I said, and my wife and my kids are having dinner, and I am like, I can't take it anymore. So I pick it up. I said, carpet cleaning, great. Can you get over here immediately? Can you guys deal with blood? It's everywhere. And can you do something on the walls and ceilings? Like, I don't care how much it costs, but can you get here now? And I was like, this lady, and I just kept going, and she was getting a little freaked out. I'm like, put me on your do not call list. Anyway, you were a better person than I was. I succumbed to temptation. One other thing to think about, you kind of brought this thing up on with banks in particular. What are the things that you should be doing? I found this out this week from an unnamed, this person will remain unnamed for various reasons, but the banks are cutting back. Like he said, there's actually kind of what they call a run on deposits, which means, I'm like, a run on deposit. Basically, they're drawn down. The deposits are going down. People, those are indicators. People are absorbing and using that cash, that there was a lot of extra cash if you qualified for some of those governmental programs like PPP, EIDL, et cetera. Well, people are drawing down on those things. And if your lender, so that's why credit rules are tightening. It's not just because of, credit scores or whatever. It has to do with how much they've got in reserves and their reserve balance or their reserve ratios. So I said, well, what do you do? He said, ask your banks what the ratios are, the credit lending ratios that they make their decision making based on. Find out what those ratios are, and then work with your internal team or work with your CPA to find out where you are, and if your ratios are good, but your bank is saying no, you may want to be looking at other banks, which leads me into one other thing. We had lunch yesterday with the guys with M2H Advisors. So Saeed and Jason with M2H Advisors, and they help companies kind of maximize and get ready for sale at some point, but they also help them maximize their spend on a number of things. And they'll help look at banks and kind of, if you're with a banking relationship, loyal, that's great. But sometimes, especially now where you may want to have a bigger line of credit, but your bank is saying no, you can go to these guys at M2H Advisors, and this is not a paid thing. It's just because we had lunch with them. And by the way, we bought, so it was not that they're buying advertising on this webinar. So anyway, it's just something to think about. But we asked them, hey, what are you guys seeing as far as cost-cutting moves that companies are doing and should be doing right now? And one of the things I thought was interesting is they said a lot of times people make the fatal mistake of cutting people too fast instead of looking at other recurring things, whether it be, and they do packaging, all kinds of sourcing, especially like a little bit larger companies, but your telecom bills, your rent, your incidentals that you're using, but especially banking relationships, even if you're in merchant services and you're using transaction fees, there are places that you can go, and places like M2H, and there are other folks out there too, but they will come in and help you. And then for a percentage of the savings, a small percentage of the savings, that's how they get paid. Just another thought for you guys to think about with the stagflation. Hey, Jack, could you share that, like that link that you used for that stagflation versus inflation, and just put that in the chat?
Yeah, sure. And I also want to mention, and you had mentioned cutting people maybe too soon. had an interesting conversation with a client who had an opportunity to hire someone that got cut. And it became not the employer interviewing the employee, but the employee interviewing the employer and saying things like, okay, I have had access to, first of all, it's like, how did you get access to some of the financials? But he had access to them. He's saying, look, I've looked through this stuff. And it was for a financial position within this company. And so he came to the table with already assistance with trying to get the company better. So we've talked about last week how you get the company better to attract people. Well, so that kind of shows it in the reverse fashion, which is that maybe this prospect employee wouldn't have had this conversation, probably still would have gotten hired. They maybe not had this conversation if that business had already looked at themselves internally to try to be better. Because the advice to, I think, the general public is make yourself look better, call up your resumes just in case, get them updated, dust them off, put them in the proper modern day format, not the format that you used when you were getting a job out of college kind of thing. So all those things, but this was in the reverse, which made the employer think, and he actually said to me, gosh, I wish I would have done those things earlier, because now it's like kind of like aha moment or oh duh moment. And he wonders how many opportunities were missed because of prospect employees doing the due diligence on companies and not seeing what they wanted to see to be a part of this employee of this company, of this future employer potentially. So just an interesting little twist on looking internally and making yourself attractive to prospect employees. And if you're lucky, maybe you find a good one that maybe got cut from somewhere else for not because of them, it's just because of what was going on in the company. Had another difficult conversation with a client at the end of last week, which they had to cut some people, and it was some people that have been with them for a while, but it's just that their jobs kind of became obsolete. So I'm thinking in the back of my mind, shame on them for not progressing in their job and just doing it same as before. So all those things you kind of be thinking about from the employer side of things, what is going to attract good employees to you? And that, I think, calls for doing the things that we've talked about, which is looking internally, balance sheet information, or about, making the balance sheet better, those kind of things. So that's how it all ties together.
All right. So you made me think of this book that Adam had me read, or he didn't have me read it. I read it on my vacation because he said, man, this is really good. And it is really good. 80-20 Principle by Richard Koch. But one of the things that he said that you struck was, if you are in an organization and you're not wired to, he advocates run your own thing. But if you're on the inside, run whatever you do as if it is your own thing. Like, run it like it's your own thing, which is kind of like what we try to do at BGW. That's why I'm super happy where I'm at, because I've run companies. I get to run what I do like my own thing. And that's a great thing to do. I was with another entrepreneur this week having lunch, and he owns 9 companies. And he is having Heritage or Blue Fire Visuals, which is one of our clients. We love those guys, Joe Gass, and I don't think Joe or Caleb are on today, but especially during PPP, they're on every week. But they do a lot of wall graphics and a lot of visual things for big venues like the Hornets, Spectrum Center and all that. But he is having who, not what, on one of his columns. So Heritage and Blue Fire have done a lot of this graphics in their space in one of his companies, but it's about focus on the who, the right people. And especially in times like this, man, make sure you got the right who, and they'll figure out the what. Andrew, Smart move by a prospective employee. Good initiative cannot be overlooked. We completely agree with that.
So Gary, I have that link ready to share. I think I lost it. I'll put it back up, but it's from Ally Bank, and just want to make clear that Ally is not a sponsor of this program. It just happened to be where I found the chart. So
we'll have to get them to sponsor. I know Diane Murray.
There you go. Okay. So not to insult any other bankers from other organizations that listen.
No.
To it.
But you know, Ally is the sponsor of the Charlotte FC soccer club. So I don't know, maybe we could get them. I don't know. Any banks out there that want to spend bazillions of dollars and have the naming rights on our weekly webinar, we might want to talk.
Do we get
right,
free uniforms, free swag?
Yeah,
Charlotte
yeah.
swag.
I mean,
then I'm in.
You know, Crazy Shirts in Hawaii was on here all the time, and they sent us some nice shirts, and they got some free publicity. I don't know that it did any good, but I know we helped them with their PPP. Any questions out there? Also, the NetSuite article, I think I'm going to go ahead and put this up there too, because I'd like to actually go through some of those things, guys, because we kind of hit on top level. I'll name the 8, and I'll actually put the link in the chat. 8 things, and this is from Oracle NetSuite, to do in inflationary or stagflationary times. Not that sure that we're completely in it. Some people think that we're actually moving there. I don't know. Improve productivity, cut costs. That's what we were talking about with the M2H advisors, guys. Evaluate your prices. The 4th one is boost quality. Some of that actually has to do with your people too, you know, who, not what. Fortify the balance sheet. We can help with that. Tighten up accounts receivable and payable. Become a landlord. Be opportunistic about acquisitions. Those are the 8, and I will put that link in the chat. Free for all, guys. Any of those that you want to go into?
So let me talk about evaluating prices, because there were some interesting thoughts that are kind of in opposite directions, so a little bit bipolar. One is that if your competitors are increasing prices, then you should stay the same or even lower yours, so that way you get maybe a larger market share. And there's some people that believe that and do that. Problem is that your costs are also increasing, so your profit margins are going to decrease if you stay the course, or if you even lower your prices. So I think the more of a majority view is to also increase your prices, but that means, you know, where it says evaluate prices, and I see that it's okay, well, what are your competitors doing? What are people in your industry doing? What are the reasons for the increases? What kind of marketing and business development do you need to do to make sure that you are, the general public knows that you are competitive? And the opposite can happen as well, which is, why is your price so much lower than everyone else's? I mean, it's kind of like, I don't know, maybe it's, I don't think it's just me, but sometimes when I look at things, I don't pick the most or the least expensive product. I don't pick the most expensive product. I pick somewhere in the middle just in case. I also look at the Google reviews or the Best Buy reviews or whatever it may be. But it's just kind of, I think, natural to not pick necessarily the lowest, unless it's truly a fungible thing and just happens to be maybe they're selling out some of their inventory, which is also a disappointment. We were talking about the increase in inventory levels. I've been waiting for the fire sale at Target that they said was going to happen, because they have so much stuff that they ordered and now we're stuck with, and it hasn't happened. So, but just something to, when you were reiterating the list and I pulled it up, it was an interesting conversation, being, one perspective, keep prices the same or lower them, or do you increase prices and stay kind of status quo with your competitors?
So I don't know if anybody on this call remembers the early 1990s, but we were in a recession then too. The Gulf War actually started during that time. And I got brought in to do my first turnaround at the ripe old age of 28 at that point in 1991. And we didn't have the money to go bankrupt. So we had to dig out. And we were working for pennies at the time, but we were able to turn within 9 months in a recessionary environment. And what we ended up doing is we put our prices at a higher level, but we went from, instead of hourly, we went to value based on the project and what the project was valued at. And then we made sure that we hit our hours within that. But we went from unknown from the client perspective, oh, what's it going to cost? Well, we don't know, we're on an hourly basis, to no, we're going to bid it and let you know what, here's the price. And we always bid it on the high end. And then we would just kill them with service and quality. We just focused on quality and service. And then we would come in and at the final bill, we would just drop it just a little bit, not a lot, but a little bit. And that, honestly, that's the secret to how we turn the company around. And everybody else quit besides me and my partner. So our overhead went way down, but we weren't paying ourselves much at all at that point. But there's something to differentiation, you know, especially when times are like this, like differentiate.
Yeah.
So go ahead.
I think the other thing that I hit on too, Gary, you know, because you asked me to kill some time on this. Just kidding. Can you hold up a copy of the book again?
I can sure do that right here.
There you go. All right. So, you know, I got a lot of value out of the book, and this may seem kind of counterintuitive, but you know, a lot of times you're thinking about, you know, winter is coming, you know, if you're a Game of Thrones fan, winter is coming, you know, we need to hang on to every dollar that we got. You know, but not all customer dollars are created equal without looking at customer profitability. So, you know, I'll give you a real world example, and I've shared this on past webinars, but I like repeating it because the more often I repeat it, the stupider that I feel, which boosts my resolve to never do it again. You know, we at BGW, you know, we used to look at like how I'm measured, and, you know, Jack may be the same way at Shoemaker, you know, in terms of like, what's your book of business? You know, how many dollars you bringing in around that place, which is a top line driven number. And we know better, because if anybody that was a client asked me, how should I structure a bonus for salespeople? I would say gross profit, not revenue. Otherwise, they will bring in unprofitable work. And then, yet I did it myself. You know, what's your book of business? You know, it's this much money. So, you know, and the justification that you would make for it is, well, at least it's paying somebody's payroll. You know, it's absorbing some of the overhead. You know, that's what you'd hear all the time. So when I finally got around to doing the analysis, as recommended in the book, at a very deep, detailed level, my favorite egregious example of customer profitability, that when looking at a top line number, you know, damn, I mean, this customer's paying us 12 grand a year. I mean, you know, if I think about, you know, average starting salary for, you know, a CPA these days, about $55,000. I mean, that, you know, that's paying, you know, at least, you know, 20% of it, you know, right there. You know, that's good money. 20% of somebody's salary. I'm not going to turn that down. When I looked at the amount of cost associated with servicing this client, because we track that, you know, Jack bills an hour to that client. We know Jack's costs. We know the cost of servicing this client. The cost of the resource that I had doing the work was $35 an hour. the amount of money I was collecting from this client was $17 an hour. So I was paying this customer to do their work. I'm going to say that again. I was paying this customer to do their work. And they have a restaurant. I wasn't even getting free freaking pancakes out of the deal. So I had zero justification for this. Zero. So that's a long way of saying that, you know, you're hearing like hang on to revenue at all costs. You know, you don't want to have that. That's true. Like that's true. You should look at that. But again, remember, all revenue is not created equal. And part of cutting expenses also can involve cutting severely, and at least start with severely. You know, break even people, you know, maybe I can make a case they're covering some overhead. You know, I don't want to let people go, you know, still paying people salaries. They're good people, gonna need them for an upswing. That's all fine. At least get rid of the ones that you're paying to do the work. Because everybody has them. When they look deep enough, you find that you have them. And I'm sure Jack's never had that story at Shoemaker.
Nope. That's hard to do. I had to think about it.
Yeah. Hey, Jack, I hate to tell you this, but we are actually recording and broadcasting video too. I'm just saying.
Yeah, okay. But yes, I mean, that is a true statement, that I think every business has that. And it could be legacy clients that for whatever reason are no longer profitable. It could be that, you know, it is in our case that maybe we have a new project from a current client that, you know, maybe we've allocated too many resources to for whatever reason. It could be that we have some younger people that we're training. We call those training expenses when we do actually don't make money on clients. Like a lot of times, that's kind of the perspective, I think. A related concept and kind of blending two of those 8 concepts together, which is being opportunistic about acquisitions, but then also dealing with productivity is, and here's an example of kind of how those things you can miss on those things, which is when companies acquire other companies or there's some merger, whether it's asset, equity, whatever it may be, that other company comes into the relationship with their own processes and procedures, which could include technology. So for a while, when we brought on an intellectual property group in another office and brought them into one of our other offices, they had their own docketing software. And it was one that was sufficient for them. And but really it didn't allow for cross-pollination of matters, meaning that if they needed some assistance in capacity, or if we needed some assistance in capacity, because that was part of the deal, is once they get integrated into Shoemaker, that we can use their people, they can use our people, because we're all one people, right? Which is true, except the fact that we were on 2 different platforms. And for a while that was permitted. And it finally got to a point where some people, including myself, was like, this is why are we doing this? It was a matter of frustration when I couldn't get something done. And it was something for that office, but then I was told that, well, but yeah, you have to use this software. I'm like, no, I don't have to use that software, because we're going to figure out how to do better. Because then I went and looked into the cost of maintaining those 2 systems. And so it's things like that, but it was a critical time, or the opportune time to look at those things as that was occurring, not after the fact. So keep that in mind when, you know, you're bringing on people. The reverse of that is also true. I mentioned a client that we had to let someone go because she basically made herself obsolete to the job, refused to upgrade her knowledge, essentially, was being very stubborn. And the company, quite candidly, could have decided to let it be. Okay, for these clients, we'll do it this way. The problem was the client, legacy clients, they love her, but it just got to a point where we've evolved, you need to evolve with us, or we need to part ways. And they ended up giving her a nice severance, which I think was deserved because of her loyalty, but not necessarily deserved because of her adamancy in movability into continuing to help the company and moving forward with its attempt at efficiencies. So again, see it from all different directions.
So the gallery is quiet out there, except, we've had some nice chat. So Andrew, thank you. He also said cutting costs in conjunction with increasing revenue provides the biggest effect by increasing top and bottom line simultaneously. I agree. The key is, cutting the right things and not making a knee-jerk decision based on cutting the big things. Usually it's people, and then regretting, and then all of a sudden, we're growing. Now I got to hire people, and then you've sullied your name out there by being known as, quick to fire or whatever. So,
something else
Thank
to
you.
consider is, maybe in times past, you set a budget at the end of a year, that's your budget for the following year, and then you kind of roll with it and you kind of forget about that. Because it's like, well, okay, this is what our thoughts were. I think that it is better to look at your budget and your assumptions more often than once a year, more often than quarterly, maybe even monthly. Some people look at it weekly. I have clients, I have partners who look at our stuff weekly, which is fine, because they will identify certain things like, okay, why did we do that? Or why didn't we do this? With respect to expenses, for example. And so to not do that, you're really putting your head in the sand and not managing your expectations and not managing what might be a different outcome at the end of your fiscal year than what you thought it would be. Some people roll with it and say, well, it is what it is, we'll just have to deal with it. But if there are things that you can do in the interim, so for example, if for whatever reason inventory on certain SKUs increases because they're not selling as well, and the reason why that came up is I think the iPhone sales have slowed down, or it was just technology in general. People are stocked up on dual screens with the lights and everything else at their houses. So all these things, it was actually Best Buy, purchases on certain things have decreased. But I mean, that should have been an expectation. I mean, the whole increase in people's personal technology, that bubble was going to have to burst, because at some point you get everything that you need. You may not have the newest and fanciest thing in that category, but so it's just being introspective, and we've talked about that before, and looking to see what's going on and testing your assumptions that are the foundation of how you built your financials and your expectations for that fiscal year.
good stuff. Thoughts from the gallery? Any questions that you guys have? You got some big brains with Jack and Adam on here.
So
Fire away what you got.
while people are thinking, no dad jokes, but I figured I'd throw something
Oh,
out
come
there.
on.
I know that. All right, I'll come up with one for next week. But did you know that you cannot hold your nose and your mouth closed and hum? Now, everybody's going to try that, right? It's true. You can't do it, because the reason is when you hum, you actually exhale. And if you close your mouth and your nose and you hold your nose, you can't. You can hum for like a second, but that's it. You can't continually hum. So there you go. For your Trivial Pursuit, electronic Trivial Pursuit, or when
Yeah, we're all
there's
going to try that now.
Yeah, when there's a lull in the conversation at the bar, you can bring this random fact up, and no royalties required. Thank you, though.
Yeah, and even if, I guess if you had a kazoo and you put, but it's going to be a silent kazoo. Oh, hey.
Now I'm gonna have to go try that. Thank you very much. I have to go at Party City now to get a kazoo.
This has nothing to do with this webinar today, but last weekend, besides me doing a whole bunch of, like, I had ripped out 10 shrubs. Oh my gosh, by hand. The Root Slayer is the best $60 I've ever spent in my life, and it's the Root Slayer. It's a shovel with these serrated blades, and oh my gosh, it's great. But anyway, we watched Jim Gaffigan's newest stand-up that he did during COVID. So it was released in 2021. We hadn't seen it. It was on Netflix. And then we watched that back to back with Brian Regan. I've seen him live in person, and oh my gosh, they are so clean, but they are so stinking funny. If you want some good-natured humor, Jim Gaffigan's newest thing and Brian Regan, anything that those guys have done is hilarious. All right. Any final questions from anybody? Andrew, thank you for keeping us moving on the chat. Appreciate that, because Papa Joe didn't show up today, evidently. Hope you guys had a great Labor Day weekend, and you're enjoying, if you're in Charlotte, North Carolina, some 70-degree overcast, but wow, other than not seeing the sun, it's just really nice out there. One final thing, if you are a BGW business client, we do a quarterly business growth workshop with Jim Dunn and Sandler Enterprises, which we bought that franchise, but he does an amazing job, and we don't charge for our clients, and it's just close to our clients. So if you're not a client yet, call me if you're not happy, but if you're happy, stay where you're at. But if you are a client and you haven't signed up for this thing, it's a great place to meet other business owners. Bring your number 2 person in your organization with you too, because it's really good for strategy, like planning and just thinking. So we do that once a quarter. It's a half a day, basically. It's 9 till like 12:30, I think. So we'll be at our place, BGW, on the 14th. And if you have not signed up and you want to we still have some slots that we can make available. That would be great. And if you are a regular attendee and graduate of Jim's Sandler class, you will still dig it. I am both. Okay, cool. Here's another. That is not me. I'm having a flat roof redone, and sounds like I got flatulence, but it's not. Marina, I reached out to Carrie, as the owner has asked me to respond to one of the RC emails. Great. I know that Carrie is like buried alive, and if you need additional assistance, let me know, Marina. My name is Gary Fry, GFREY, at trustbgw.com, and I'll help you on that too. But Andrew, that doesn't surprise me that you are a regular attendee here. I know that. And you are a graduate of Jim Sandler class. So even if you're not a client, just email me, maybe. You know, I do appreciate it. But it's really good. So yeah, just ping me on my email, Andrew, and then I'll do something special for you since you've been here all the time. Week 127. Any other thing before we go?
I'm good. I'm surprised that people are quiet, but that's fine.
I know, it's very quiet.
Answered questions.
It's not as fun when you guys are quiet.
I know.
And
maybe Congress will do something stupid and give us something to talk about next week.
Oh man.
Can only hope.
There's a high probability.
I wish they would stop doing something stupid all the time, but you know. Anyway. All righty. Well, we will put this thing up. Oh man, that just sounds bad. We will put this thing up on BGW CPA YouTube channel later on this afternoon. Thank you for what you do. Thank you for showing up. And Andrew, hit me up on my email, gfrey@trustbgw.com, and I'll help you. All right. Y'all have a wonderful day. And as
Thank
Paul
you,
Harvey
guys.
says, good day.
All right. See you guys.
Bye.
See ya.
Bye.
Bye.